Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. If you're interested in auto stocks, it might be time to look at Stellantis stock. They're traded on New York Stock Exchange under symbol STLA. Auto stocks have been under pressure, especially those focused on expanding their electric vehicles or EV presence. Fears of lower demand for higher priced EVs and a lack of EV infrastructure in the country has turned the market against automakers. The feeling is that until EV prices drop and the charging network accelerates, consumer demand will be sluggish. But if you take a long-term view, the EV market should pick up, which could benefit an automaker like Stellantis NV. John?
Thanks, Mo. Yeah, Stellantis. It's a major global legacy automaker focused on expanding its presence in EVs. Stellantis has operations in over 30 countries and sells in over 130 global markets. Now, STLA stock was flying high after reaching a record $29.51 per share on March 25th. Prior to collapsing 27% over the past 3 months and 19% over the last month alone, at least of this recording, hovering just above its 52-week low of $15.12, which was set on August 13th. Stellantis stock currently provides a compelling risk-reward opportunity while also having a juicy forward dividend yield of, I think it's like 10.2%.
Doing on the financial front?
In a nutshell, expect a few hiccups, but think long-term. Netherlands-based Stellantis reports in the euro. The exchange rate at this time of recording was €1 equals around $1.11 US. Now, the company's revenues have risen in 3 consecutive years following a significant decline during the 2020 health crisis. Stellantis reported a record €185.9 billion in 2023. Now, the company is expected to see some contraction in 2024 before rebounding in 2025. Analysts expect that Stellantis will report an 8.3% drop in revenue to $187.27 billion, or around €170.6 billion. Keep in mind the actual reported numbers will depend on the exchange rate at the time. Now, on a positive note, 2025 is expected to see the company's revenue rebound 4.5% to $195.7 billion, or around €178.3 billion.
If you like what you see so far, check out incomeinvestors.com. There, we're offering a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, is this company profitable? I know some EV-related auto manufacturers have struggled.
The bottom line actually points to consistent profitability, which is nice. This includes 3 straight years of growth following 2020 to high in 2023. Now, analysts expect Stellantis to report a lower adjusted profit of €4.60 per diluted share, or around €4.19 per diluted share in 2024. Now, that's down from $6.40 per diluted share in 2023. The situation is expected to improve in 2025, with consensus calling for an adjusted €4.87 per share, or around €4.44 per diluted share.
And what does dividend look like?
Well, the company's fund statement shows consistent free cash flow with 4 straight years of growth to a record level in 2023. That's important since free cash flow helps pay for dividends and gets used to pay down debt. Now, Stellantis currently pays a quarterly dividend of 41.5 cents per share, or $1.66 per share on an annual basis, for a forward yield of 10.68%. Now, the higher yield is due to the weak share price, which I think is an opportunity. Stellantis has paid a dividend for 4 years and raised it for the last 2. Payout ratio here is relatively low at 35.6%, which affords the company the ability to continue paying dividends and raise it too, if it likes at some point as well. Now, whether Stellantis will raise dividends, though, depends on the financial results, which at this time are expected to see earnings fall in 2024.
John, thank you so much for your insights. Contrarian long-term income investors should look at a Stellantis stock given the high yield and price deterioration. A turnaround in EV sales and lower rates could drive up demand and generate a rally in STLA stock. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.